Welcome back. You've been watching Charting 2016, an analysis of how the technicals are stacked up for 2016. I've been in conversation with Atul Suri of Rare and Gautam Shah of JM. What about the Bank Nifty? That's been the bigger dog and probably the biggest reason why the market is so weak. Any signs of a bottom there, Atul, or is it going to cause more pain?
I think that also has had its share. Yes, it could slip a little more. But, Udayan, what I really think is that you will see these short covering bounces, which you do see from time to time. But I feel that you're not going to see a total massacre that is happening out there. In fact, what I really feel is that you may get a chance to retest. That's how bases are made. The previous lows are retested and you sort of make, double bottoms or higher bottom or what have you. And then you start sort of, pulling up. So, as I said, the pain is there, the pressure is there. There is a big sort of shadow that is looming ahead, but I don't think all is lost, and it's not time to really go in and put the money, because finding bottoms are very, very expensive. You'd rather wait for the market to bottom out, to make some higher tops or something to get in. You may miss the early part, but you're much better off trading the trend rather than catching the bottom. So as I think that there is not going to be massive damage, yes, but the basing is going to take time, and in this phase, personally as a trader, I would be looking for stocks that relatively outperform, because that's where I feel where I would like to be. So just to sum it up, that I'm not looking to see climatic falls and dramatic falls in the market. I feel that we may get a little into the basing things, good days, bad days, but days of despondency and days of frustration. But very often I feel that this is how bases are made. So we will be in through some more grind and pain.
Gautam, how do you approach banks right now? A, do you think there is substantial price downside even from here? And B, what are the chances that when this market eventually recovers and starts grinding higher, that banks will be at the forefront once again? Because banks and pharmaceuticals were the leaders of the last big up move in the market. Will they again be at the forefront? Or do you think some other sectors have to lead this time around? We cannot take it for granted that these banks will again lead.
Well, Udayan, with the way some of the PSU banks have behaved in the last 6 months, you just cannot say that, they would potentially be leaders, because I think PSU banks have really taken the space where infra and reality took in 2008. I mean, the decline is pretty similar, because at every support level, it seems as if they will stop and then they go on to make a lower low. So you don't want to be catching a falling knife in the PSU banking space, and I do believe that there could be some more pain left. But then I think what concerns me right now is the setup of some of the private banks, because private banks have relatively held out in the last 3.5 months, and it's in the last couple of weeks that we are seeing some structures develop on the bearish side. And I think some of the popular large cap banking stocks could potentially see a 5 to 10% drop in the next few weeks. And if that were to happen, I think the banking index can go down to a level of about 13,400, 13,500. Now, once again, 13,400 on the Bank Nifty is a very, very important support, because that was the major breakout point on the weekly chart, on the monthly chart a couple of years back. So I think that's something that could play out in the next few weeks. However, apart from banks, I think what I'm really concerned about is the CNX IT index. It's been the safe haven sector for the last 6 months. Since this sector did not break down, we said that maybe the Nifty is also going to be safe. But now the CNX IT index breaking a level of 10,800, I think is a very serious development that has transpired in the last few weeks, and that calls for a 10% drop. So in a scenario wherein the banking index and the IT index are in bad shape, and with the mid-cap index also chipping in, it's very difficult to believe that Indian markets can actually stage a substantial recovery from current levels.
That's true. If IT and banks both fall 10%, then your market is probably down 8-10% from there on. But Atul, coming on the other problem area, you were alluding to FI outflows, and the rupee is at 68. I mean, the dollar is at 68 to the rupee. Does it have more downside from here? Because that must be weighing on the minds of all these investors. They're getting hammered on stocks, and they're getting no succor from the rupee.
Absolutely. I mean, if you look at the dollar-adjusted Nifty, you will really get a sense of what it means to FIs, and there is no joy. In fact, the pain has been much, much more than what our vanilla Nifty is showing us. So currency is definitely a very important thing. The only good point in this whole currency move is that there hasn't been much volatility. It seems to be on a much smoother curve. And the destruction in currency is, as I said, evident across emerging markets. It's not just stock indexes, but you will go and look at the Brazilian currency or the Russian currencies, and you will see the kind of accidents they have had. So apart from just the emerging market, the equity per se, even the currencies are taking a knock, and that's what's leading to a double whammy and the pain. As far as India goes, I think that we will gradually move towards around 70. I mean, though we've not really got into a new low, but I mean, those were volatile days, and on a close-to-close basis, we are at new lows vis-a-vis the dollar. So I really feel that we are going to be moving towards 70. The only good point, Udayan, is that the volatility is not there, but this is an adjustment that's happening across the world. And this whole, EM basket sell-off, equities and currencies. So I guess we are there, and definitely that is a very big pain point. And as I repeat, that you have to go and see the dollar-denominated Nifty, and that will actually throw up a very, very different picture. In fact, that's a bit of a scary picture, actually.
Atul, quickly, we're coming to the end of the show. You spoke about hunting for opportunities. Which of the sectoral indices technically are looking the most promising at this point in time for longer-term investors who are trying to seek opportunity in this carnage?
But then I think the consumption stocks are still holding out. I know it's a very beaten down and often talked about sector, but if I look at the damage, you really, in a falling market, you've got to really look for stocks that fall less. And yes, there has been damage in consumption stocks also, but I find that relatively the consumption theme is held out well. There are some stocks, again, not all stocks, but some stocks are holding out, and that's where I think you can look for opportunities. I find that gold is a very, very fascinating chart. If you look at gold, it's been through a 4-year bear market, and you've been hitting lower tops, and taking out $1,200 in the international gold, I think, is a very, very significant thing. We haven't had this for almost 4 years, and not only has it done it very quietly and smoothly, I think that gold is going to again come back into the center stage. There's a lot happening globally in other asset classes, so very few people are talking about gold, but it's very important for Indian investors. And I think that currency adjusted, if you look at the gold charts, if you look at global gold charts, even there are a lot of stocks that are related to the underlying commodity. So I find that gold is going to be talked about a lot more. I think there is an opportunity there, and it is now actually showing a total inverse correlation to global equities. So gold as an asset class, I feel, will come back into our consciousness or center stage after 4 years. And as far as stocks go, I repeat, it's going to be still for some time the consumption theme, the more defensive stocks that there are. I mean, you've had some big accidents in pharma, but a lot of pharma stocks, or some, have really held out. Even in private banks, you had some very big accidents, but a few of them have held out. So essentially, Udayan, what I am looking at, how I approach markets for my trading, or where I would take bets, are stocks that fall less in falling markets, because very often they are the leaders of the next bull run. And consumption is where I still see some silver lining.
Out of time, gentlemen. Thank you very much for joining in with your thoughts. Enjoyed the chat. Thank you very much for watching.